Hello folks, welcome to Pro Trader Strategies Market Commentary for Tuesday, May the 11th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I talk about the economic data, the geopolitical environment, how those two come in to impact the markets with some of my market analysis. I'm going to do the same thing for you folks in these daily market commentaries, but I'm also going to talk about the option strategies I implement into my portfolio based on those assumptions we come up with in my market analysis. For you folks, I've streamlined that process for you guys to spot the optimal option strategy for your given assumption. We don't just go out there and buy a call for a bullish assumption. What we do is we look at the pricing, and that ultimately determines that the structure of that strategy. So please check those out at Pro Trader Strategies. Those are my webinars where I really drill down on those, give you guys a real in-depth view of how to find those strategies quickly and easily. All right, so let's get on with the economic data. Across the pond, we've got Italian industrial production coming in at 0.1%, expected to be 0.5%. They're usually more along the lines of textiles, folks. The zoo economic sentiment is 84, expected to be 68. I mean, they really knocked it out of the park there. That's one of the highest readings we've seen in probably the last 10 years, I would say, at least. Then we also got the German economic sentiment for the zoo economic sentiment for Germany, I should say. That came in at 84, expected to be 72. Again, another huge number. I mean, we were seeing that number a little bit towards the end of 2020, heading into the coronavirus, but this number is the highest reading, again, since we've seen it in a very, very long time. All right, and then moving over here to the United States, we got the NFIB coming in at 99.8. We were expecting it to come in above 100, which would have been one of the first times we've seen since the last 6 months this year, I would say. Just a little bit shy of that, though, but still a good reading nonetheless. JOLTS job openings, 8,120,000 job openings out there. Folks, that's the highest reading I've seen in the last 20 years, in this decade, I could say, or even this century, right? The 21st century. So anyway, this number just amazingly huge, and we saw that the unemployment rate uptick. That's another signal that those people are staying off of getting a job and staying on the unemployment line, I should say, because of this number. I mean, basically people were making, I was hearing, upwards of $18 to $20 an hour on their unemployment, which is more than what obviously you would get as a new hire, getting $15 out an hour. Even that is a good wage, right? All right, so let's get on with the markets. We've got crude oil just slightly in positive territory. I mean, it is a turnaround Tuesday, folks. If you were up early this morning watching the open, markets were free falling, and it is a turn your hands around. As a matter of fact, in the floor we used to do that. There was a guy that had a song that he had written to that, and it was turn your hands around, and then he would go on this whole thing, and it was actually really funny. But you'd get the whole pit doing the whole turn your hands around. It was pretty funny. Pretty good scene. Anyway, that is really what's seeming to happen here. Maybe not quite all the way into positive territory, but well off the lows, as you can even see here with gold only down $5 on the day, which was a bit surprising with the equities and everything else falling out of bed earlier this morning, the fear of inflation going up. I would have expected this to be where people were a flight to quality, is what we used to say, and that's where you take money out of the higher risk assets and put it into some of the lower risk assets, which is historically what we would consider something like gold, but that wasn't really happening. As a matter of fact, we were seeing even Bitcoin coming off, but near the highs of the day as of right now. Bonds are continuing to sell off. They did not catch a real bid. It wasn't really much of a fake out or anything to the bonds. They didn't bite on the equity selling off. And as you can see right now, testing the 50-day simple moving average. Something I wanted to mention about the bonds before I flipped out of there is, if you haven't refinanced, if your 30-year mortgage is not below, I'm going to say at least 2.25%, you should check it because it would be the time to really consider to start refinancing right now. It can't hurt as far as I can see. Interest rates in bonds are going to start creeping higher, and that could really affect your ability to get a nice interest rate, folks. All right, as you can see, NASDAQ was off or down on the day, but off of the lows. Dow Jones Industrial Average off 500 points. Again, down a point or 1.5%. 200-day simple moving average, folks, would not be a horrible thing in this market right now. It would be a healthy correction. You've heard me talk about this time and time again, that the markets are going to see these corrections happen. And you can see the NASDAQ is back to the NASDAQ. You can see that it is below the 50-day simple moving average. Back to that trend line that I've had in there forever. And folks, that is really something we're going to keep an eye on. It has proven itself since 2018 to be a solid support and resistance trend line. Okay, so, you know, as hunky or as funky as that is, you can see how it has tagged that line several times. Again today, bouncing off of that low though, and making a nice little candle if we were to finish here today. Yes, we are below that 50-day simple moving average. And usually that is now signaling some more bearishness to come. But a strong move like this into the close is very bullish as far as I'm concerned. I mean, a confirmation we have to wait for, but you can see that that whole sector rotation might be going back into tech and out of the blue chips. We're going to have to wait and see, because you can see the NASDAQ is down big today, but bouncing much more than what we're seeing with the Dow Jones Industrial Average. As you can see, down 500 points on the day. E-mini S&Ps trying to make their bounce after testing the 138 Fibonacci extension here. We've tested that several times in the past month, and it is held. We are going to keep our eyes on that. A settlement below that is almost signaling for sure we are going to test that 50-day simple moving average, which a lot of people are probably keeping an eye on for a technical move, all right? We aren't out of the woods at this point, but you can see the Dow Jones Industrial Average, the NASDAQ really kind of leading the charges to the downside today, off the open anyway. And Boeing making a bounce off of the value area high. I just threw this up here because I was flipping through some charts here earlier today, but this was an interesting one. It doesn't look like a beautiful chart setup, and Boeing doesn't often give us the best candles, so we need to look at some other things for swing type trades. And keep your eye on Boeing finding support in and around this area here of 225, I would say, would be a buying opportunity, but staying above 227 is going to be huge. PENN, something that I have in my portfolio, is making a nice little bounce today, finally clawing its way back into positive territory after hitting 75 today. That was the buy spot. I got a little anxious, got in a little bit early, and had even sold puts at this level because I thought we were going to retest that. Couple of technical setups got me to bite a little bit early, but you can see it came down and tapped that 75 area, and that is a major area of support, and I think a lot of people went in there to buy in and around that area. And we could see WYNN, let's check out WYNN. WYNN coming out with better earnings as well. You know, occupancy is really through the roof. A lot of people, I'm hearing, a few friends have gone to Vegas since they've started opening up, and a lot of people are spending stimulus checks there, is from my understanding, from what I'm hearing. So keep your WYNN and the rest of these casinos could be doing very well, and the government could be funding it in a roundabout way. All right, so other than that, I haven't done anything. Keeping my eye on my portfolio as this turnaround happens. This turnaround Tuesday. Don't want to start jumping on board and switching everything around. I'm pretty happy with the directionality of my portfolio. I've got pretty good hedging in there, and it's really turned around quite nicely. So at this point, I'm going to keep my eyes on it and let it meld out a little bit more and see how we work this turnaround Tuesday for the rest of the day before I make any major decisions on the rest of the week on how we're going to set this up. All right, that's all I got for you. Other than please smash that like button for me. And if you can't take that, take it easy. Check out the disclaimer, by the way.